Taxes, interest rates, access to health care, and unemployment benefits. They're all public policies that can impact personal finances. And with a new administration set to take over in Washington, some of those public policies could be seeing significant changes. Jay Spector of Everest Financial joins us now to talk about what to watch for. Jay, always a pleasure. Good to have you here.
Thank you, Ted. Nice to be here.
All right. New administration, new economic ideas, regardless of, Republican, Democrat. It's new. It's different. Are we going to see? What are we going to see?
I think the proof is going to be in the pudding. We're going to need to see what the president-elect and his team put forward to Congress with specific policies regarding tariffs and taxation and so forth. So I think it's going to be a wait and see for a little while until we get the specifics of those policies.
And the focus, I would imagine, is how much disposable income a person has. That's kind of the bottom line, isn't it?
Correct. So, there's a lot of discussion surrounding tariffs on imported goods from other countries. There's discussions related to taxation on our income and so forth. And a lot of that is going to be in the news in the coming months, in weeks and months ahead. So we'll need to see what happens there so that people can continue to have high disposable income, but the government has their policy put in place.
Let's talk about tax rates and specifically how they would impact, say, retirement accounts. What do you look for here?
Well, if people if there are higher tax rates or if people are taxed more from an income or capital gain standpoint, or if high tariffs are put on goods and services that come into the United States, that's going to leave less income, less disposable income, less savable income for consumers and for retirees. So it could very well have an impact on investors.
Yeah, and the economy as a whole. If you don't have the money, you don't spend it.
Absolutely, yeah. If people don't have the money, they're not going to be out spending, which could have a rolling effect on business.
With inflation, in terms of personal finance, what are the best strategies when inflation is high, and does that change when it starts dropping, if it starts dropping?
Yeah, so what we've seen, over the last year and a half is you've had interest rates that have also been high. And so as people have had inflation, it causes them not to save as much because they have to pay more for groceries, gasoline, other consumables that they might have. It's still very important for investors to save, whether it's through their corporate business retirement plan, through individual retirement accounts, and so forth.
What about things that might be able to outpace inflation? Maybe the stock market, maybe real estate. You look into those?
Absolutely. Investors should really focus on what's important to them and what their goals are for their investments. Obviously, investing in the stock market carries a degree of risk, so investors need to be comfortable with the risk that they're taking. But that's how you're going to outpace inflation, is by investing in the stock market over the long run.
What is interest rates? Where do they play into all this?
Interest rates are very important. You have interest rates that are on a home mortgage, for example. You have interest rates when someone buys a car. You have savings interest rates when people give money to the bank to allow them to use the funds, and they in turn get interest payments on their savings. So interest rates are very, very key.
I would say savings accounts, bonds, these sorts of things, always a wise thing to look at when inflation and interest rates are high?
Again, it's a key, it's a tool in the toolbox for folks, but the important thing is how do those investment vehicles or those types of accounts fit into someone's overall investment plan? Very, very important to not box out or box someone into a specific investment vehicle, but really to focus on what's the most important thing at that given time.
Is that difficult to do at this particular time, considering you're going from one really ideology to another?
It's a great question. It is challenging, but that's where we have to focus as financial planners on really understanding what the client's needs are and what the client wants in order to provide them with investment recommendations on what's appropriate for them moving forward and changing in any given political climate.
Right. Being flexible.
Yeah.
Access to health care.
Yeah.
The Affordable Care Act has always been in the target of President-elect Trump. I'm assuming that will not be a favorite of his. Access to health care in general on personal finances, for some folks, that is huge.
It's an enormous part of an investor or a retiree's retirement budget. It has to be factored in when folks are considering retiring early, or in active retirement. They have to focus on what that cost of health care is. And unfortunately, the cost of health care has been going up over the years, and people have to factor that in and really plan for it. I think that's going to continue, in the weeks and months to come.
Is it more volatile right now than you remember Or is it pretty much the same?
It's pretty volatile. I think it's going to be the market. I think, anything focused around investing, the markets, interest rates still are somewhat volatile. But that's just been the normal course of business the last several years.
And unemployment benefits, I want to get that in there too, because for some folks, these are huge, especially as a bridge. But in any way, shape, or form, if they are tinkered with, that affects folks.
It does. People who unfortunately need unemployment insurance are needing a little leg ahead. They need something to help them move forward till they get that next opportunity. Those dollars that people receive for unemployment benefits are then reinvested in the economy through purchasing at local grocery stores, local shops, malls, what have you. And so that could have a domino effect on spending into different consumer sectors.
Last question before you go.
Yeah.
Does this feel in any way, in terms of personal finances and the economic landscape, anything like 2016 when Donald Trump was first elected?
I think we have a better sense of what to expect moving forward with the president's second term. We was somewhat of an unknown back in 2016. I think we have an idea of what his policies and procedures are going to be and what we can expect from him moving forward. But like I said before, I think what we really need to see are the specifics of what he's going to propose this time before we understand what the full impact will be on investors and consumers.
Jay Spector, Everest Financial, good discussion. Good to have you here. Thanks for joining us.
Great to be here. Thank you.